Ladies and gentlemen of the crypto space, we're live on a Monday, March 7th at 11:32 a.m. It's time to rehash a topic, an all-important topic considering events in macroeconomics and events in the crypto space. Yeah, I know a lot of folks have been playing speculative newly launched assets, and I'm almost confident to say that position sizes were excessively deployed and time horizon was completely ignored, and really the true methodology to evaluate what was deployed completely ignored. And it's not about price action. It's not about, oh, it's going to go down and it's going to come back. That's not the point. The point is that it's important to have rules. It's important to respect those rules, and the rules are changing. They're always changing. And the better you respect the rules, the better the health of your portfolio will be, and the better you will do over time. Let's pop it over to the main screen, and we'll see exactly what I mean. So we have a damn war, and it's a global war in all regards. It is a world war, and it may calm down. It may escalate. There's no way to assess how the progress of this military, as well as what's going to probably evolve into a cyber attack, uh, how it will escalate. So, for instance, if it escalates, the entire economy is skating on thin ice, 1 inch thick ice, and that has to do with liquidity, and that has to do with disinflation of currency, global currency, and so on and so forth. And we see that, the FROAS, and um, we see the oil spike, and the oil spike is going to blow out budgets. So, I've talked about these things on Twitter. I don't need to rehash that. But these things are disruptive. But we also have the notion of intervention, and that's really become the primary base case. Are they going to intervene? Of course they're going to frickin' intervene. So what happens? Does their intervention not work? Does it work? So we're starting to question even the intervention. Like, oh my God, they're going to print, and the market's going to go up. And we're like, are they actually going to go up now that they're intervening? Or maybe the market's actually just going to keep collapsing. So now we're not even betting or structuring the portfolio based on natural phenomena like inflation is deflationary. The prices go up. It tells people, oh, I'm not going to buy anymore. So that causes deflation on consumer prices. And then the price point of goods and services needs to fall to move inventory. So that's how the prices deflate. So inflation of consumer prices is technically automatically, inherently fiscal tightening. It does it for them. Um, so natural processes are completely out the door, and they'll drive you nuts. So what does this all mean, and how do I tie this into crypto events? And I'll talk about Andre also, guys. Um, you always need to be expecting directionality both ways, and it's more important than ever to have a properly balanced portfolio. Now, it all comes down to really two things. Obviously, you have two primary components of a portfolio: complete risk off and risk on. And risk off, obviously, in the crypto space is some sort of considerate stablecoin position, and there's obviously different risk profiles associated with each stablecoin. And for myself, my risk minimized position is GUSD, given a variety of its characteristics. So you have your optionality. In times of insanity, you want optionality. What is optionality? You have a capacity to make choices, decisions. Do I go left? Do I go right? Do I buy something? Do I sell something? Do I take money out? And do I pay some bills? All these things are imperative, and you can't do shit unless you have optionality. I mean, seriously, I see some of these narratives floating around on Twitter regarding one of my favorite assets. I mean, our beloved assets, Curve, and they're so defensive of it. It's such an incredible protocol considering where it came from. But folks maybe don't remember 2020. And it was in complete hyperinflationary price collapse. And people were hating it. It was really just a toxic environment. And it took a while to get to where we are. And now we see the dynamics at play. But you got to remember, a lot of folks probably bought at $7. Come on, man. If someone bought at $7, they're killed right now. They've been completely annihilated. Our beloved curve annihilated people. So people are very judgmental. And they got to understand that the most important thing isn't a particular asset, isn't what you're deploying capital to. It's how you think about the portfolio and how you manage risk and how you carve out optionality so you can actually make choices and instead of being handcuffed to a situation where it's down 60% and I have to sell so I can have optionality. You don't have to be deployed to assets. The base case in a volatile environment is to be able to make choices and to have cash. Now, I know this is a big learning experience and it takes time to get to where you want to be. And everyone will always say, you'll always say, no matter how large the portfolio is, but I don't have enough money to do it yet. Okay, that's not true. What matters is the rules. You could have a $10,000 portfolio, and you should follow the same rules that I discuss. You should, pick your percent risk off, 30%, 40%, 50%, and it's just sitting and waiting for an opportunity that is so damn obvious to grow your portfolio. And you grow your optionality, and you grow your assets, and that's the way you grow your overall wealth, not by choosing or over investing in the right asset at the right time, but by following the rules and properly managing your portfolio and not over allocating, destroying your portfolio. The rules. It's not easy. I mean, look, who is buying Curve at 40 cents? Come on. Well, besides me. So maybe I was a little excessive in the way I was deploying back then, but I've learned this so much between then and now that that's how you grow. And we've gotten to where we are. I'm actually eyes on curve at the moment. I'm really liking this falling wedge. So 3 drives down, we got 1, 2, and we're waiting for the third. And we need to see macroeconomic conditions do what we hope they'll do. But check this out. Currently, it's hitting resistance. It's hitting resistance on a previous resistance, and this is a heck of a resistance. So my eyes are right here. I'll do the brush. I mean, come on. You see the wick. Do you see the wick? Do I have to zoom in? I mean, there's a damn wick right there. I mean, look at that. It's bottom of the purple box. That's a wick. I mean, come on. It's hitting resistance at a previous resistance. So that is what it is. So it's a heck of an asset. I'm currently not exposed to it, but I'm exposed to the entire curve narrative. The price action of convex and the price action of frags are because of the power of curve. And that's all meaningful, and that's great. And don't think for a second there's not going to be incredibly powerful protocols aside from curve. Don't think, look at Uniswap. It still does an immense volume. And we know our stories about what they are with regard to VC investment and, like decentralization and Curve obviously checks boxes that other protocols don't. And that's why we have such a high opinion for the Curve narrative, not only the Curve asset, which will hopefully find a nice discount. The bottom of this falling wedge, $1.50, $1.40, maybe a wick down to what I'd like to see, $1. If it hit $1, I'm taking a fat position. But I'll watch the position size such that I still have optionality depending on macro conditions. Listen, here's the point. The dynamic nature of a portfolio. I mean, there were periods of time when you were in 2020, 2021, where you're like, all right, I'm fully deployed. It's all deployed because the market is screaming. And that's okay. And then you carve out. And the appropriate time to carve out is when everything is green to the upside and you got giant wicks to the upside. And that's when you're carving out. And now, very few people do that perfectly, but that's something you should endeavor to do. So you're always looking for a reason to carve out optionality. And when markets are completely raging to the upside, that's exactly when you want to do it. And how much do you carve out? A nice amount. 10%, 15%, 20%. And then you want to grow your optionality as markets are continuing to race higher. such that when markets are racing lower and lower, you have the capacity to make choices and pivots and changes in the structure of the portfolio. When there's little risk in the market, you're deployed. When there's more risk in the market, you need that optionality. So when there's little risk in the market, that's when you want to carve out the optionality so that you're prepared for when there's a shitload of risk in the market. Soon's in the house. Dan, good morning. How will Andre? What the hell is everyone talking about? Andre leaving. Andre's a developer. He doesn't do anything but develop. People don't understand the mind of a developer. He's done with everyone. He's done with the general public. He's done with social media. I'd be done too. And he's shutting down some servers that operate some user interfaces. There's no such thing as shutting down contracts. And that's something he's talked about significantly. That when you're dealing with contracts, you're basically building services APIs in so many regards that are immutable and decentralized. So they're just there for everyone to consume. And they operate, especially when they're built the way he talks about, they operate without governance. They're just pure code, and they have rules. And that's extraordinary the way he talks about his contracts. I'm downright fascinated by each one of his protocols. The price action means jack shit because I'm talking about from a developer perspective. Now, I'm exposed financially to a variety of his projects. Great. Do I know that the general public is fucking nuts and they're not going to understand any of this shit from a developer perspective? Yes. So am I going to expect insane volatility? Yes. Do I expect him to stop developing? Of course not. Do I expect him to risk off in this macroeconomic environment? Of course. Did he lose a couple $100 million being overexposed to Phantom Protocol assets? Yes. Could he have done better? Yes. Is he human? Yes. But the way he's restructured his portfolio is quite interesting. He's taken a shitload of risk off, but he still has close to 150 something million dollars with a Gnosis safe denominated in Phantom FTM. So he's got a lot on his plate, and there's a big burden, you know, being responsible for capital. But he's not responsible. That's the thing, and that's the annoying thing from a smart contract developer's perspective. It's not his responsibility. His responsibility is to write some awesome code and make sure the code works as designed, as behaved. That's it. There's no fiduciary in these markets. That's what's so brilliant about the crypto space. This is self-responsibility. And how do you exercise self-responsibility? Position size to manage risk and portfolio balance. And that's it. That's all it is. And protocols prove themselves over time. Protocols are the machine, the great overlord, as he talks about. And I appreciate that significantly. Tyler, Noah's everyone expects a collapse. What's the contrarian play? Where's the capital go next? I don't freaking know. What I know is I got my optionality. I'm sitting on 35% stables. Maybe if I had 10 mil, I'd be sitting in 70% stables and I'd be in 30% asset allocation. But what do I know? I know that the asset allocations I have right now, I'm comfortable with. So considering my portfolio size, my age, my income, so on and so forth, I'm comfortable with the portfolio balance I have right now. And I do get tempted to carve out more out of assets, even at these depreciated prices. But that's just because I don't have enough optionality. But I have the quantity of assets that I really want. And they're okay because I measure the portfolio from the bottom over years time horizon, and the directionality of where it's heading is good, and I am achieving my goals. There were times in my past where I've said all I want to do is have the amount of stablecoins I have right now. I've said in the past, all I want to do is have that amount of stablecoins, and I've achieved that. So I've my what I would hope for the future of my portfolio is clearly more than that. But the fact that I can recall having had that goal in the past and achieving that means I'm actually achieving success. And you get completely thrown off by the irrational exuberance and seeing your portfolio at 100x on the money, it just drives you into complete insanity trying to process where the hell you are, whether you're successfully managing the portfolio or not. Please measure from the bottom, guys. No, that's Tyler's question. George, hi, George. Earman, JL, Raul, Dr. T is in the house. Always a pleasure. I hope everything's well, my friend. Risky Crypto, Igor, no any ideas why Kyber is still holding strong? Unknown. Kyber was an original great play from 2020. It doesn't have as much momentum as it did back then. Has great tech. I don't know what they're doing with regard to business. What do I know about assets that I'm interested in? I'm interested in assets that have monetary policy characteristics that have been the most successful. We know gauges and bribes and monetary policy means everything. So you want emissions. You don't want too many emissions. You want gauges and bribes so you could direct those emissions, and you want the bribes, which drives the deflationary pressure on the price point of the emission asset. And point being, we've seen very successful monetary policy that encourages a trade balance where cash flow in equals cash flow out, or at least it balances, it fluctuates over time, and that's why we see depreciation. But as you can see, this curve is not in hyperinflationary price depreciation. It's because there's more or less a trade flow balance, and the circulating supply is creating the price action. Excess emissions, hyperinflationary emissions, disinflationary, yet still hyperinflationary, are being consumed by protocol mandate. And that's the convex realization of what it does, providing much needed deflationary pressure to stabilize the economics of the protocol. And that's exactly what Andre honed in on with solidly tokenomics. And there's literally no invalidation whatsoever of the tokenomics that he created. And frankly, there's no invalidation whatsoever of the swap protocol, solidly versus solid, that he created. In fact, we see an explosion of consumption. We see some incredible volume. It took a long time for a lot of protocols to get to millions of dollars a day. Yet we see in the overview, we're dealing with spikes of several $100 million a day, $57 million a day thus far, almost $200 million yesterday. For an exchange that just launched a week ago, these volumes are extraordinary. So it's irrelevant what people are saying about the exit of a developer regarding a protocol that doesn't need a developer. I find that absolutely flabbergasting. Like, what the fuck are people looking at? Do they not understand? There's no development work to do on these contracts. They're done. That's it. Period. I mean, isn't that obvious? I mean, the folks need it spelled out the way I'm spelling it out, the way smart contracts are written. They're immutable. Once deployed, they're done. There's nothing to do. He has no work to do. You know when people say on Twitter, can the dev do something? There's no fucking dev to do anything. You can't change the code. People are crazy. This price action is completely irrational. What you want to look for is the secondary protocols picking up and consuming the base layer protocol. What you want to see is secondary developers picking up the shitty user interface that was launched. And we're going to see that. So what you want to make sure you did is deploy a rational position size, and you haven't destroyed your whole damn portfolio by deploying 100% of a portfolio to an asset that's down 95%. Now, if you did that, you're sure as hell hopefully not going to do that again. Don't do that again. That's how you destroy a portfolio. All I always see is incredible metrics and statistics. I don't understand what the hell everyone's so got their panties in a bunch for. I think they see price down and they got 80% of their portfolio, and I'm going to ape into this asset, and they literally destroyed themselves financially. That's crazy. What you have is one of the most brilliant tokenomics to ever be deployed in the entire crypto space. Written into contracts designed to not have any governance whatsoever. They're completely immutable. There's no developer intervention possible. There's no iteration possible on the contracts. That's doing upwards of 9 figures a day in transaction volume. Sometimes I don't even want to talk about it. Lisa, I'm delighted I caught you live again. One moon, I'm joking, but I prefer a Corona to this terrible war. Yeah, this is a shit show. It's only 1,000 kilometers away from here. Brings priorities into focus. Our house, our hearts are open. Yeah, the homes are open to refugees, and hearts are open to people that need. My wife and when anyone asks for capital, I tend to give it. Like when folks are on the side of the road, I give them like a $20 bill. I just give people money. I have plenty of donations on a monthly basis. Children's International as well, especially one of my favorite. It's a laundry list. Point being, keep your house, your hearts, and your minds open in this time. And that's what I try and do, and that's why I do it with the stream as well, because I know people probably got frickin' nailed with this price action on Solid, and I feel bad. And the best I could do is help and encourage folks to never do it again. And what does that mean? That means you don't enter positions that large unless you have extreme confidence. I mean, I have all the reasons in the world to have the position size that I have with convex and frax. I have all the reasons in the world to warrant such a relatively large position that accounts for almost 40-50% of the portfolio. And I had all the reason in the world to deploy the capital that I did to Solid, and it was a relatively small position. It was like 5, 6, 7%, and that's okay. And I knew the risk that I was taking, and I knew the depreciation expectation. Was I hopeful that it would be different this time? Sure. Was I prepared for it to not be? Yes. In fact, when I bought the position, I didn't even add it to my portfolio. So I was taking capital out of my cash position, and I wasn't adding an asset to my tracker. I considered it an expense. So that's the deal. That's how I approach this particular situation. John, Noah, is it still safe to onboard for buying stables at this time? In your opinion, stables are always a great thing to accumulate. I'm thinking because, uh, you know, in the worst case scenario, let's say there's like cyber attacks and electrical grids go down and banks go down and credit cards don't work. You only have so many options with regard to currency payments. They make these nice little gold and silver cards that have break off pieces. So, traditional money and payments don't work in a time of social unrest. So what you have is the barter psychology, where a person sees gold and they're more inclined to trade something to you because they see something that they're like, oh, maybe that's valuable. So gold has a powerful effect as money, and dollars as well. So physical dollars are important to have, but it's very difficult to transport these tangible um, monies, whereas it's very easy to transport digital monies. And there's plenty of countries around the world that are very friendly to crypto, and it's very easy to travel with crypto, and everyone loves dollars. So folks around the world love dollar stablecoins. The synthetic dollars, these digital euro dollars in all regards. Vlaku's in the house. Craig, how are you? It's a pleasure. Hope everything's well in these crazy times. Soon, I actually work in this field. It's amazing to me how they don't understand this stuff. They want decentralization, but don't want it. They want it to. People have no idea what the hell they're wanting. The people in the DeFi space seem to think only about money, and it's really a sad situation for greed and degeneracy. They don't understand the technology. They don't understand software. They don't want decentralization. That's the deal, assume. It is what it is, and we must help as many people as possible. Shisha, my man, are you buying? Absolutely not. One curious view: yes, smart contracts with no and min functions. That's the difference, very much. Uh, New York State of Mind, is this a bad time to onboard fiat stables in the market to try 10-20% interest as long as you diversify across few chains? Complexity is very hard to get 10 to 20% interest in this market. You'll get 10 to 20% interest as folks rotate out of risk off and into risk on, and the stablecoin LP positions become undiluted. Right now, they're extremely diluted. So in this instance is exactly why I've opted for a GUSD position. It's pretty much instantaneously transferable to Gemini, and it's very quickly converted to dollars in a bank account. So that is provides that kind of optionality. This is very high risk market. This is where you want to be able to make quick pivots and make really tough choices if need be. So that's how I've structured things. After being on Twitter, I think they don't need you to tell them this. Yeah, maybe. I don't know. I don't know what Twitter needs. All I know is I could keep providing the content I provide and try the best I can. So hey Noah, hope you are well in these crazy times. Quick question: how would you deploy if you only had 10K in capital right now? I wouldn't deploy a damn thing. I would sit and wait for the plumbing to collapse, and then you could easily take simply a Bitcoin position. You don't have to worry about the insanity of the altcoin space. If the plumbing collapses, now we see a big risk off in Bitcoin, which is totally possible. You got all the Bitcoiners saying, well, there's so much support at 30. I would hope there's so much support at 30. You got a damn 100 SMA right there. But my eyes would be on the weekly and the 200 SMA. And that's, talking lower price points. This was a big risk off. I mean, Bitcoin crashed to $3,800 in March 2020. This was a massive, massive capitulation. And we don't see that yet. We don't have a risk off in macroeconomics remotely comparable to what occurred that day. That was a complete full-on liquidity event. So you have no idea how far a wick down is going to go on a liquidity event. But if you see $15,000 Bitcoin, that's a heck of a buying opportunity. And I know that's what I'm looking for in these markets is discounts. And that's exactly why I tell you like a dollar curve and $15,000 Bitcoin. I mean, let's take a look at Convex. There's plenty of buying opportunity. And this doesn't mean I don't have a position. I got a fat position. But if you see like $6 convex, it's a heck of a buying opportunity for considering the directionality of the protocol over time. You look for previous resistances to flip support. The fact that it's holding above this current price of 1544, that's very good to see. But these are not times to try the market. This is not a time to learn the market, to attempt to understand what the hell it is and how it works. This is a ferocious market filled with scavengers and predators going to suck the capital right out of your wallet any chance they get. You buy when everyone else is crying in a market like this. This is not a bull market where you can throw shit at a wall, it's going to stick, and the shit's going to crawl up the wall. This is not that market. This is a market for patience and, as Buffett says, discounts. Buffett buys when the price is right. That's the deal. Kyle, did you have a chance to check out JPEG-D? I have not. I'm barely doing any work in these markets. I'm going back to work after this. I got some stuff I got to do that's more important. People have been burned by a dev exit many times over, so the panic is understandable. Yeah, dev exit on protocols that are dependent on the dev. Uh, there's, for instance, Curve is not dependent on the devs at all. The devs can exit and the protocol still work completely as designed. Frax is completely automated as well, does not require external intervention. The AMOs, they operate and do as the contracts were designed. Deploy capital, that's risk management. If you're deploying capital that's dependent on a freaking developer, you're probably deploying capital in a wrong way. It's a misallocation of capital. You have an excessively exposed risk profile. And the interesting thing, probably the most interesting thing about Andre's projects is they're not dependent on a damn developer. Holy crap. People buy them for the wrong reasons. This mentality that a person is required to manage smart contracts is really disturbing. It's really disturbing. Sub Posh Captain, you have an issue with how Andre left. like having the UI pop was shut down. No, listen. Andre should have never launched the solidly user interface. Andre should have launched the contracts and said, "Fuck everyone. The contracts are launched. Go do with them what they do." That's what he should have done. Anyone who says, "Do I have a problem with the way Andre left?" does not understand smart contracts. So please, my friend, it's not about Andre. Andre's job is done, had nothing to do, has nothing to do, and built a tokenomics and monetary policy that's absolutely extraordinary. CVX disgustingly cheap. No, $6 CVX is disgustingly cheap, my friend. You guys are not digging deep for how ferocious the predators are. You want disgustingly cheap at $6 convex. So if you're going to buffet the market, buffet the market. There is no reason to be deploying capital in this market unless you're prepared for it to be taken from you by predators. I'm not even going to get into macro. I'll hit the rest of your comments. I mean, the fact that we're below the TWAP on the monthly for S&P futures is pretty stark. I mean, oil. I mean, let's take a look. WTI. Let's take a look at the contract. Uh, Oil futures. No, I want to look at. Yeah, let's look at that. All right, it's pulling back down. But come on, if it stays above these numbers, this is stuff that is crushing on the entire economy. You blow out the budgets on every corporation in the country, yeah, you're going to collapse an entire economy. So right now you're in uncharted territory, and I would not be deploying capital. This is where you sit back and add to optionality. You take your yield, you add to optionality, and you're growing cash. What do you do with cash? You could go to the frickin' supermarket and buy food. You could take care of your family. You pay uh, school the school bill. You could pay for your kids. You could pay things. You could live. So that's very important. I'd be very weary of assets. Now I say that as a person that has about 65 to 70% of the portfolio deployed to assets. So for the love of God, I talk about cash as incredibly important, but I'm also the person that's deployed to these markets, managing them well with proper consideration for risk. So I don't want to hear folks say, "Oh, all he does is talk about cash." Yeah, because that's what matters. Sorry, guys. I blow up sometimes. Stacking. If you love solid at 12, you're going to love it at $1. Yeah, I think everyone in here wishes they were able to take their position at $1. Craig, doing well, sir. Hope you're well too. Things get crazy. Been full-time Web3 since November. Heads down. Thought I'd pop in and say hello. I hope you're doing some fancy stuff. I'm pretty sure you are. I'm tempted to do Web3 myself. I'm tempted to do a little bit of contract work. I have my stablecoin design. And we'll see. We'll see what happens. I think it'd be a heck of a stablecoin protocol that doesn't exist currently. Brady Neals. Oh, you may have missed that, Craig. It's a Medium article I wrote a while back, but not really a while back, like a month or so ago. But it has some pretty fancy tokenomics. Brady's in the house. Killis, good morning. Um, 69 people in the stream, 20 likes. We can do better. You listen to Brady, guys. One curious view. It's surprising people don't think the current geopolitical situation isn't bigger drag on global GDP effects on sanctions, economic war, non-trivial. The system is on the verge of collapse. This is a world war, and there's no other way to describe it. Oil price spiking like this could collapse entire countries. Dollar spiking can collapse sovereign fiat around the world. Bonds really tell the truth that they're actually stable, but if you see a spike to the upside or a complete risk off to the downside, that's your cue that you got to make some drastic portfolio decisions. I mean, dollars had 99 point. Wow, wow. You know, a breach of 100 to the upside, and you're getting into some territory that's putting pressure on foreign fiat purchasing power, and putting some serious pressure on foreign countries. Quantified, if we go bust and curves at $1 and BTC at 15K, what would you say to a 70-25 split curve BTC as a cap gains play? So I've been thinking about this, and I'm tempted to just say BTC because that thing's going to rip, considering all the developments over the last 2 years. It'll rip hard. And maybe it's not even about just liquidation. Maybe it is the end, and the Bitcoin narrative prophecy gets fulfilled. Because if you get that 15K, you're going to have a fair amount of Bitcoin compared to its current price point, and that's a pretty big buying opportunity. So yeah, I think to myself, there's always a reason to sell. Um, Bottom line is, in March of 2020, you got about a 20x on your Bitcoin from peak, trough to peak. Three and change K to 60 something K. You got about 20x on your money. So what the hell are you playing altcoins for if you can get a 20x on your money on Bitcoin? And that's crazy. I mean, Curve, we know what Curve is. And that's why my sentiment is the way it is. I mean, you have these bearish markets, and you have this extraordinary chart that tells such a story of the entire history of the crypto space, really, including variations of monetary policy, synergy of protocols, federation of protocols. It's an incredible chart. That's why you get a good enough discount, you can take a large position. I would take a large position here. Dylan, we want your stablecoin. No, yeah, I'm not getting my stablecoin. I'm way too risk considerate in these markets. Craig, hit me with a link on Twitter to that medium. Let's see if we can find it. Here you go. Okay, my friends, 67 people in the stream, 27 likes. We can do better. Let's wrap it up today, Monday, March 7th at 12:09 p.m. I thank everyone for joining. As always, tell everyone to subscribe. After Party on Discord, which still has the most rational community in the entire crypto space. These boys are getting better. They are learning, and I am impressed every single day with the folks in our Discord. If you have any questions or want to talk to me personally, go to noahseidman.com, and I'm more than happy to help you make more rational decisions and help you to the best of my abilities. I wish you all a wonderful day. I will see you again Wednesday. Yeah, today's Monday. You have a good one now. Peace.